right, investors bought the dip, like what they generally do, and the markets rallied higher, led by what we want it to lead by: technology, semiconductors, high beta names, all leading the way higher. And in what continues to be a pretty strong correlation, gold continued its record pace up above 4,000, clearly above 4,000 today. But we are seeing again that we're seeing a lack of confirmation. Breadth remains negative. The bond market is not necessarily confirming what we're seeing there in terms of like what the FOMC plans to do for the rest of the year going into next year. I break all of that down in today's video in our market outlook preview. So let's go ahead and get started. Today is Wednesday, October the 8th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Hey, before we get going too far, I remind you that you can get access to all of our Market Outlook blog posts by going to marketscholars.com, mousing over Market Outlook, clicking on Market Outlook video archives. You can see all of them. These are all free. Today's will be at the top of the list. You can click this link to get you to today's blog post. When you click on that, you'll get to this page right here. You'll see that if you're already a subscriber, just click on log in. You'll get to the post. If not, click on this join free. You can join our website for our basic tier for free and get access again to all of these blog posts. This is what it looks like. Quick summary and a lot of detailed information about what happened today and why it matters and what to watch for next. Very detailed information here. Again, it's all for free, including the market outlook preview that you're watching right now is always embedded at the top. If you click this link, it will take you to that basic subscription page. Again, click on join free now and then check out, like I said, mouse over Market Outlook, click on video archives, and then you can get to today's blog post there. All right, now let's take a look at what's going on here today. So AI stocks, new deal with OpenAI or XAI, excuse me, sorry, competitor. XAI and NVIDIA sent the AI trade booming again today, even with like the Bank of England and IMF kind of, again, joining the chorus of all this AI bubble. But again, new deals, NVIDIA paying somebody to buy their chips or investing in somebody to buy their chips. I guess would be the better way to say that. And that pushed the AI trade higher. So when you look at like SMH, the chip stocks, big rebound from yesterday's decline. You can also see that as well on the ARK investments, the real high-end risk appetite scale. So this high beta names just really doing very well and rebounding in quite a big way today. So that's the main thing that happened. The other thing that's really pushing higher is, despite the dollar going up the last couple of days, gold just pushes up. Like it's going up every single day. It's got a cluster above average on the range today, up to clearly above 4,000 now. We were just a few points above it yesterday. We are clearly above 4,000, and it's not just gold. You can see silver as well. There's the investors are hedging, right? They're hedging for safety into these precious metals, and when that coincides with a rise in the dollar as well, it kind of gives you a little bit of an idea about how bullish people really are right now in the markets. Breadth improved slightly today, so we talked about how negative the breadth was yesterday. So breadth improved, slightly, but remains negative. When you take a look at like the number of stocks above the 50-day moving average, is still falling below its moving average. The number of new highs is still, let me zoom in so we can see it a little bit better. But it's still below its average, and its average is falling. We did get a little bit of a ramp up in the advanced decline lines. When I look at that, we ramped up a little bit today, recovering some of what we saw yesterday. And the average did bounce after going slightly negative yesterday, slightly positive today. And then again, like the other big thing that happened today was the FOMC and the minutes coming out on what the FOMC expects to do. And they pretty much confirmed what the market already knew, and that is the Fed is widely expected to continue to cut rates, just like last year in the last two meetings of the year. So you got 94% chance of a cut in October, and then a 80% chance of a cut in December. So still very high probability, but the problem is going beyond that, and you can see as a result, the 3 month is still, kind of a little bit below the 4% mark. It's got to get to, in between the 4 and 4.25%. But the 2 year, right, that's the path. Again, another cut would be down to 3.5 to 3.75%. And that's right where the 2 year yield is. So the bond market, even after the Fed minutes today, are pretty much saying that the Fed's going to be done with their rate cuts by the end of the year. With this last couple of meetings, so as a result, you can see didn't go up a lot. 4.13%. Didn't recover all of what we saw yesterday, but still a pretty decent move back up to kind of stem the tide a little bit on yields and getting slightly back above these moving averages. So in today's market outlook video, I break all that down and talk about, okay, why does this matter and what do we now expect going forward from here? How bullish do we expect to be going into the end of this week? When's this intermediate decline going to end? We talk about that a little bit. We look at the sector rotation, very important sector rotation today. So we like that, and we take a look at how the technology sector in particular is doing, and that's where our trade idea of the day came from. Stock that was kind of instrumental in the first tech bubble back in 2000 has not been such a big winner so far, at least in this tech bubble, but had a really good breakout today out of a sideways pattern. So we talk about how to break that. That's our preview for today. If you want access to our full market outlook video, click this link right here. That takes you to our Market Outlook Foundation page where you can subscribe to our foundation tier and get access to today's full video, usually about 30 minutes long, as well as the trade idea that we do at the end of the video. We do one at the end of every Market Outlook video, and we do it in real time. So you also get access to our live stream, Market Outlook Live, where we put on the trade idea today before the market closes in real time. We also manage the trades in real time that are still existing from prior market outlooks, and then we keep track of the results of all those trades, and you get access to that with our Market Outlook Trade Tracker. So all of that, again, for just $29 a month, or works out to be about $1.40 a video. You get 2 months for free if you sign up for the Market Outlook yearly plan. You'll see a link on that page as well for $2.99 a year. A lot of our subscribers take advantage of that deal to get the 2 extra months for free. Thank you very much for watching tonight. We really appreciate it. Hit that like button down below, subscribe to the channel, click the bell so you're notified when these videos are posted. Comment down there on anything that stood out to you today. All of that really helps get our video out, mostly just to everybody who follows and subscribes to our account. Follow me on Twitter at DavidSettle42 for more content between the videos. You can also follow me on social media like Facebook, LinkedIn. Like our content there. That helps as well. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.